Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday, actually happy Good Friday. Hope everybody is getting ready to either celebrate a wonderful Easter weekend or Passover weekend. Whatever it is that you're celebrating, I hope that you have a fantastic one. Well, again, it's Good Friday, but we saw a very bad jobs number. The jobs report, or the employment report, the much anticipated employment report, came out today, and expectations were for about 248,000 new jobs added to the economy, for the unemployment rate to stay at 5.5%. The actual numbers were, well, the 5.5% unemployment rate was in line with expectations. That's the way that came out with. But the new jobs was only 126,000, so almost half of what the market was expecting, so a big, big surprise. Also, previous month's jobs numbers were revised downward, meaning less jobs were actually added to the economy than previously reported. So this was a big surprise, and interest rates and the mortgage-backed securities are reacting very favorably to that, so we'll finish the week better than where we ended last week. And that is just now has put the Federal Reserve in quite a conundrum. Now, they've said that in order for them to increase interest rates, short-term interest rates, the Fed funds and discount rate, they wanted to see two things happen. They wanted to see the unemployment rate get to about 5.1%. So with these weak numbers, that's going to cause this a lot of speculation as to when is that going to happen, and there's a lot of weakness in the jobs number. The other thing that they've also said is that they want to see the inflation rate get up to about 2%. Now, it's been hovering at that 1% level. We did see a little bit of wage-based inflation growth. It was slight here in this report, so that's the one positive for the at least Federal Reserve to see more growth. But generally speaking, the Federal Reserve does not have the things that they need in order to increase credit, and they're really wanting to increase short-term credit because they want to get rates up a little bit just in case the economy falters a little bit, or when the economy falters later on down the road, so they have some more ammunition to actually spur the economy. With interest rates, Fed funds and discount rate at 0.25%, they don't have any of those bullets yet, so they want to put them back into the gun so they can use them maybe at a later time. And right now, with the economy the way it is, they're going to have a very difficult time doing that. And so right now, at least, interest rates are improving, thinking the Federal Reserve is just going to have to wait longer. Now, the stock market is closed here today for Good Friday, so we'll see how the stock market reacts next week. If it sells off, maybe interest rates even continue to improve. But right now, interest rates are pretty considerably, strongly below that 4% level, so they'll remain really fantastic. And it's a great time to, just continue to get out there and tell your clients now's a great time to finance that property for the long term if they're looking to move. So if you're working this weekend, so are we, even though it's Easter weekend. If you have any questions, as always, give me a call. We'll keep you informed with what happens next week, and if there's some follow through to the positive sign. And if you have any questions, as always, give us a call. Thanks for joining me with Java with Jared. Hope you have a very wonderful Easter or Passover weekend, and we'll talk to you soon. Bye-bye.